This is Market Taker Mentoring's Options Impact. This is Tier 4, the MTM Trading Path. Cluster 2, and this segment is on entries and exits. Options involve risk. Prior to buying or selling an option, a person must receive a copy of characteristics and risks of standardized options. Copies are available from your broker or by calling 888 Options, which is the Options Clearing Corp. Entries and exits. Entries. Let's start by saying all of your entries should be written down in your trading plan. You should have the entry points defined in detail, just exactly what you are looking for to enter the trade. Otherwise, don't take the trade. If you are not going to follow a trading plan, what is the purpose of having one? Lastly, make sure you document your entry to a trading journal, which we will talk about more in detail in another section. Some things to consider. There are several things to consider before entering a trade. Is the risk reward acceptable for this strategy? Or am I accepting greater risk because maybe I need to make some money back because I had a few losses in a row? Don't sell for anything less than what you are looking for. There are plenty of options out there in this vast options market. What about the overall market? Maybe you are looking to enter a bullish trade. You may want to hold off if the general market is bearish when you're planning on entering your trade. You wrote a detailed entry strategy. So does this entry fit that strategy? If you don't stay disciplined now, what chance do you have to stay disciplined later on this trade? There should be no guesswork. Here's an example of an entry confirmation you might have. I am going to buy this call option if the stock price moves above the previous day's high. If it hasn't, simply don't enter the trade. It's okay to have more than one way to enter a trade. Just make sure you know what they are if you have more than one and follow them. Some more things to consider. Am I familiar with this stock and its options? Have I traded it before? And do I have an idea how this stock trades? Or is this a completely new stock, a new set of options for me? Or maybe it's a brand new option strategy that I'm trying out for the first time. Is the bid-ask spread at an acceptable level per your trading plan? Or are you bending the rules maybe? You may need to check multiple time frames, not just for the entry, but also to get a better picture of the stock chart in general. If you plan on being in the trade maybe only a couple of days, you may want to zoom down to a smaller time frame like an hourly chart and look for an entry there. Have that in your plan. Or maybe look at a 2-year weekly chart and see if there's some support and resistance that you didn't notice on a smaller time frame chart. And lastly, do you have your trade management plan in place before the entry? You don't want to make emotional decisions when it comes to trading. So know what you are going to do in advance and don't start to think about it in the middle of the trade. Exits. Hopefully that is you when the trade is completed. No surprise here. Your exits should be well defined in your trading plan. I would venture to say that most emotional decisions made in trading are when you exit a trade. But not an MTM trader. He or she knows exactly how they are going to exit before the trade is even entered. Some things to consider. Exits are often neglected because most traders are so worried about finding trades they hardly even consider the management or exits of the trade, knowing that they're going to make money no matter what they do. It really can make the difference from being a successful option trader and let's say maybe not so successful. How are you determining your targets and stops? Based on a percentage? For example, I will risk 30% of the total cost on this trade and will look to make maybe a 75% profit on it. Or are you basing targets and stop losses on the stock chart itself? To give you an example, maybe you're going to buy a call at $52 when the stock is at $52, but if the stock falls below $51, you will exit the trade. And you see there's a resistance level at $55. So that would be a good place to place a target for your option trade. Are your exits realistic and within acceptable ranges given your risk-reward ratio? Just make sure they are. There is nothing wrong about having multiple targets and stop losses. For example, you could say, I'll take a few contracts off when I'm up 50% profitable on this trade, and maybe a few more off when I'm 75% profitable. What if your exit points are exceeded? Have something in your plan for that as well. Will these exits be pre-existing orders on your platform? Or will they be mental exits, meaning I will exit the trade when I see this happen? Have that figured out in advance too. And finally, options have a time component, meaning they lose premium over time, so you may want to consider that aspect when considering an exit. Maybe put a time exit in as well. Maybe you bought some long puts and no exit has been hit. You could have an exit that says, I will exit in 5 trading days if neither a profit target or a stop loss has yet been violated. It sounds very overwhelming at first because there are many things to consider and think about when it comes to planning your entries and exits. But once you have a plan and make adjustments to that plan until you get it just right or just at your comfort level, it will become easier and second nature to you. Having a plan for your entries and exits and sticking to your plan can make all the difference and put you on the road to option trading success.